let's talk about the broad environment here from your standpoint. We've been talking about the possibility of recession. How do you see things?
Well, I think that the way the market's going to play out going forward to the end of the year, I think the market right now is going to set up a series of higher lows going forward. And I do believe that the NASDAQ is going to outperform all the indices. I'm looking for the NASDAQ to push up probably double-digit gains. S&P probably anywhere between probably half a point to 0.9% up. And I'm looking at the overall Dow and the Russell probably lagging behind the markets overall.
Your business is about data. Tell us about your clients and what you're telling them today.
Well, basically, I deal with, right now, retail clients and institutional clients. And right now, what I'm looking at is I have a buy signal on the overall market. I do. And I'm looking for pullbacks in the market. And again, like I stated, I'm looking for a series of higher lows going into the end of the year. And I do think the year is going to end up pretty much positive.
John?
So domestic U.S. stocks, is that where you want to be, or do you see anything else in the world
stocks,
or in any other asset classes where investors should
I only
be
track the U.S. Stocks right now, and I have a buy signal on the market right now.
What's telling you buy?
My software I created. Basically, the way I track the indexes.
How do you incorporate just the interconnectedness of markets and global macro in general? I mean, for me, I sometimes affectionately call people U.S. equity navel gazers because they don't look at everything else. Does that ever find its way back into your model when you get a big shock, like macro shock, like deflation, or the big slowdown we saw in emerging markets or China earlier on in the year?
Well, basically with the slowdown in China caused the downdraft in the markets, and it's all about technical work that I look at, so I don't really play into any of that. It's all about technical factors that I look at.
And how on the U.S., if you're looking at technicals from a price momentum perspective, I could see your perspective. How do you incorporate volume? Volume has been very light on this up move. In fact, it looks like a liquidity trap to me. But again, does volume find its way into the analysis?
I don't track volume. Matter of fact, a guy who runs a hedge fund called me up and he said the spiders are 40 million shares and it's at noon today and there's no volume. It doesn't make a difference to me. Price action is what really counts.
Why is price action more important than volume? You would think that volume is in fact an important indicator, but you're looking at actually sort of...
I'm actually looking at the patterns in the market, and that's the most important thing. And
so like the trend is your friend?
Yeah, my software, I can identify trends and reversals in the market, and I can identify the patterns within the trends and the reversals.
And what's the pattern? Break it down for us in layman's terms. What's the pattern that you're seeing that's telling you it's time to buy? What happened?
Oh, no, it's not time to buy now. I'm looking for a pullback here, for another entry point, but I had a buy signal about 800 points lower from here in the market.
But you're looking for a pullback to make higher lows, not break through the September and August lows.
I think the lows are in for the year, and I think pretty much that we're going to push upward. And like I said, I'm looking for double-digit gains in the NASDAQ. I'm looking for single-digit gains in the S&P, probably 5 to maybe 9%, and I'm looking at the Dow and the Russell lagging, like you mentioned earlier. The Russell's lagging here. So.
Do you mean for 2016?
For 2015.
What about 2016?
2016, I think there's a 70% chance that we're going to probably somewhere retest the lows that we saw. And then turn back up.
Recession hits.
I don't think
you buy it during a recession. You know that, right? You buy stocks.
I'm calling for recession 2017. Though I don't think it's going to happen next year.
Well, if you buy stocks in a recession and you sell it to cycle high, you will absolutely crush most people. I think
the thing that's kind of frustrating is when you see the market drop the way it does, and then people come to me and say, "Oh, it'll always come back." I'm like, it's like okay,
it doesn't always come back.
No, Maria. So the thing is that what's really important is I think after we get this push up towards the end of the year, and I do think that the Fed's not going to raise any interest rates, and I think that's what's going to fuel the market upward in November and December.
So no hike in December?
No. I mean, I've been calling for no interest rate hikes since January, and if you look at the statement from the Federal Reserve in September, they pretty much said it's data dependent. And if you look at retail sales coming in at 0.1% for September, not really robust. New home sales, they were looking for 555,000, came in at 468,000. Pending home sales, they were looking for a rise of 1%, negative 2.3. So the data doesn't warrant a rate hike.
If you rattle off all the data, we'll be here all day because it's been a long list of slow.
I'm looking at the fact that the Fed's not, the language is what they're saying, and I'm looking at the data coming in, and it's not.
That's the problem. When you take their word for it on being data dependent and you just look at the data, you might be thrown for a bit of a whirl.
Pretty much in step with what this panel has been talking about as well. Steve, great insights. We appreciate your time today.
Maria.
Thank you so much, Steve Kalayjian there.